Crypto Hotep here with another investing video. Okay, technically we are on week 18. I sent out a message to my channel last week that I was on vacation with my family, and that would have been week 17. So we kind of jumped forward here to week 18 in the family portfolio. If you're unfamiliar with the family portfolio or your first time watching the video, go to my channel, go to week 1 and watch that video. That's where my methodology, the reason I'm doing these videos, will come to play. The long and the short of the story is I created a short list of stocks for my family to pick from and also to share the investment journey with them, as well as dividend investing in particular. They picked the stocks they wanted to, and we chose M1 Finance as our broker of choice for this. And the reason is with M1 Finance's technology, you can have one big portfolio and have several pies within that portfolio designated to, in this case, my family members and their respected stocks. And every week we look at the balances, we look at the activity, and most importantly, we look at the dividends and also record how we're feeling about the market, how we're feeling about what we're investing in, and any changes we should make. Hopefully these videos will be informational, and hopefully you find them informational as well. If you don't have an account with M1 Finance, feel free to use my link in the description below. And as always, this is not financial advice. Please consult a professional before you trade or invest in any stocks or crypto or metals or anything of that sort. With that being said, we can jump in. But before we go to this week, which is week 18, we always look back at week 16. In week 16, our balance was about 701.70, it looks like. And this week, we are up again at 767.49. So a significant jump. Our weighted rate of return year to date is 13.83%. Dividends we've earned year to date is $4.53 with a market gain of 59.61. All in all, a very good numbers right here. On the activity side, since we've spoken last, we have dividends that have been paid out from Coca-Cola, Union Pacific, PepsiCo, Broadcom, Kraft, Domino's Pizza, Public Storage, Meta, and Texas Roadhouse. And as well as we've had several buys here on July 5th. We bought Target, Celsius Holdings, Pepsi, Starbucks, and McDonald's. I can tell you right now for Target, I believe that was mine. Celsius Holdings, as you all know, my wife owns Celsius. PepsiCo, my wife also owns Pepsi. Starbucks, our youngest owns Starbucks now. And then McDonald's, our oldest owns McDonald's. And then we did have one buy, which was my buy into Realty Income Corporation. Okay. And just going into the portfolio as we go down here, and we always start bottom to top. At the bottom again are my wife's stocks. So as you can see, she peaked here around May, and then as you can see here, we've had a slight dip, and that's mainly because of Celsius. So her weighted rate of return year to date is down a negative 5.3%. Only 15 cents dividends earned, and most of that is because of Celsius Holdings. Celsius Holdings is down over 25%. Her shares of Google, however, are up over 29%. And then Pepsi it's down a little bit over a percent here. Are we concerned about Celsius Holdings? I'm not concerned about their future either. I think they're still a good company. And I would be buying Celsius, and we still are buying Celsius for my wife's holdings right now. Okay. The next one, we'll go to our middles. Our middle stocks, very good. So money weighted rate of return year to date over 13% with 2 dividends earned. Everything is in the green here. Costco shooting up over 16%. They had fantastic earnings call this week. They also are hiking up their membership, which is to my chagrin, honestly, because we have a Costco membership, but I get it. It's the cost of doing business. But with that strategic move, their stock has gone up. Amazon stock is in the double digits percent, and everything is in the green here. Nothing I would do to change this at all. Our oldest, as we all know, our oldest keeps it very simple with just two stocks, McDonald's and Apple. Our oldest is also up over 13%, a quarter dividend earned. And as we all know, and as we all have seen, Apple has made all-time highs this year. So considerably up, over 42% on Apple alone. So that engulfs McDonald's negative 11% gain or 11% loss right now. Our youngest up a staggering 32%. Ridiculous. And why is that? Look at Tesla. Tesla, as we all know, if you've been following the tracking in the weeks by weeks, when there was a lot of FUD around Tesla for over a month, we were still buying Tesla in little bits and pieces of Tesla because this is a small account, but we were still putting money into Tesla for our youngest just because it was at a fantastic price. And again, this is the reason why when there's quote unquote blood in the streets, as Warren Buffett said, you want to be greedy, meaning that when people are scared and when price is low, that's the best time to buy. And that's what we did. And that's why our youngest has a significant uptick in their year-to-date gains. Just fantastic. This is a fantastic thing to see here. And then mine is not up over 32%. We're up over 7%. I have $4 in dividends earned. And as you can see, majority, if not all of my sectors are up in the green. So technology up over 19%, real estate up over 10%, pharmaceutical, restaurants, food, meme stocks as well. And I did add, if we look here, I did add the realty income here into my REIT or real estate sector to accompany public storage and federal realty only to boost the dividend rate. So this will boost my dividend percentage overall for my portfolio, and I think it's a good stock to accompany that with everything considering. Technology in the double digits, up considerably, and I can't be more pleased with this portfolio. And with that being said, guys, we will go to a couple things here in relation to the reason that we are so gung-ho about like dividend investing and compounding that interest. So when we talk about dividend investing, the main reason why I am an animate supporter of it is because of the effect that the compounding the dividends and still adding to your balance has a dramatic effect on your balance for stocks. And what I mean is, we can look at this compound interest calculator. Say, for instance, we had an initial investment of $3,000. Our APY interest is only, say it's at an average rate of 4 to 5%. So we'll just put 4 on the low end. If we don't do anything and we hold our money in this account and don't take anything out, we'll say for 20 years from now, and we make considerable deposits each month. Say we put $300 in each month, nothing too crazy. Then with those dividends, and you can see the dividends as the deposits increase, the dividends also, or the dividend amounts and the interest also increase. That $3,000 in 20 years will turn into $116,000. Now, if we also hold it for longer, say we do 30 years, now we're looking at and that's just an additional 10 years. We're looking at over 217,000. So that's the magic of compounding those dividends and having those dividends work for you. And that's one of the reasons why we use M1 Finance, is because they have the platform where those dividends that go into the account, when you are paid them, they will reinvest those dividends in that same asset or a percentage of another asset or the asset of your choosing automatically. So it's hands-off, cruise control, and it's just the easy way of investing. So as a recap here, the balance is $767.49. We have about $4.53 year to date earned from dividends, with an overall rate of return of 13.83%. And as always, guys, with that being said, I hope these videos were helpful. Feel free to like, subscribe, comment. Let me know what you guys think. And as always, thank you and happy investing.